Guys, this is going to be the first episode of basic terminology. We're going to be running over a lot of the terminology that we use on a day-to-day basis in the Forex market. The first episode, I think we're going to be running over what spread is, and then also what base currency is, and then also what pairs we are trading and how it all works. So I think the first question we can start off with is, what is spread? There are usually two different prices for currency pairs on a trading platform: the bid price and the ask price. The bid price is the price at which you can sell the base currency, and the ask price is the price at which you can buy the base currency. The difference between these two prices is what is known as spread, and this is one of the ways in which brokers can make their money. That's how they make their money, right? So I think to just run a bit deeper into this, we can understand what is base. People hear base currency. What do they mean by that? So I think I did a little bit of an example over here. What is the base currency? The base currency is basically the first symbol that you see when looking at a Forex pair. For example, we have Euro USD. So the base currency is Euro and the opposing currency is USD, right? So what this means is basically, if you could put it in dummies term, you are on Euro's side of things. You are trading with the Euro and you're trading against the dollar. So how does this look in the market? For example, if you are wanting, so how would this look in the market? Obviously, if Euro goes up and gets stronger against the dollar, you will start to see Euro USD rise, right? And if USD gets stronger than the euro, you'll start to see Euro USD fall because you are trading with the euro and against the US dollar. And if the dollar gets stronger, then Euro USD, because remember, euro is your base pair, is going to start falling down. But if the euro gets stronger than the dollar, you start to see the volume start getting pushed into the bullish side momentum of things, right? Cool. Now that at least we got to explain the base currency, how that all works, now we can go into a bit more deep into what spread is. So my little example here, if we are looking for buys, let's say this is Euro USD, we are looking for, if we are looking at buys, this is my little example here, on, let's say, for example, on Euro USD, right? And we are waiting for this pullback area to happen. We're wanting price to pull back into the zone, so we can look for a buy. So for example, this is where current price is. Let's say it's at 19,695, right? This is where the market currently is, and you're wanting to enter buy. Because of spread with the broker, you are not going to get directly entered at this white line. You're going to be entered at the bid price, correct? Why? Again, this is the broker's facilities. This is how they make money. So ideally, when you enter a trade and enter a buy at this area, your entry is going to be a bit higher up instead of where price is. So in order for you to get profits, price needs to move above the bid price entry where you entered, right? So that it can accumulate the profits that you're in. But if it's below as you enter, automatically you'll be in a negative area. And then obviously this also works with vice versa with selling. Let's say, for example, we're wanting to sell, right? And we're wanting price to break through. Let me just remove this here real quickly. An example of a sell, let's say price is pulling down here, breaks through, retraces, and we want to enter on the retracement, right? We're going to get moved down here, right? For example, and then start price moving. Ideally, exactly like with the bid price when you're entering a buy, we're going to get the ask price for shorts. Instead of entering on the white line here where we're wanting to get in and you enter a trade, you're going to be put at where the ask price is because that's what the spread is. Now keep in mind, you have to have an idea of what. So keep in mind, every pair has different spreads. So you'll be able to identify that if you go to quotes If you go to quotes on your MT5 and MT4, you'll see that it will be on the bottom left of your on your mobile device when entering the app. It will. So what you want to do to identify what the spread is for the currency pair that you're trading or the indice pair that you're trading, you are going to be able to identify this in quotes on your MT5 and MT4 platform, on your mobile device or on the laptop. It will be right underneath what the pair is. So just to give you an example, so Euro USD will be there, then it will say spread, and it will have, let's say, 15 pips. So that's what will be on the quote side of things. And then you can identify, cool, if it's 15 pips or 1.5, let's put it at that, 1.5. So it's going to be 1.5 points, pips away from the the entry price, if that makes sense. In this example, just to give you another one. So in this example, I'm going to be showing you, we're trading Euro USD. The spread is 15 points. Divide that by 10. It is 1.5 pips. As you can see here, this is 15 points currently. So if we had to enter the trade on a buy position, for example, let's say price pulls back into this area and we are looking for buy, we are going to be entered. We're going to be entered over here, right? Now, one thing to keep in mind when you are trading and identifying the spread in the market, when this moves down 15 pips, right? Let's say, for example, you had a 1.5 stop loss, 1 pip. Let's say you were buying and you had a 1.5 spread stop loss. You would automatically get tapped out already, right? You would be hit already off the 1.5 because your stop loss is right there. So you would not be able to enter the trade. So what we need to make sure we do is, let's say, because of the spread that we're currently running, let's say we're at this point here. Now our stop loss is not 15 pips from the entry. We are now almost 30 points, you know, 3 pips. We're almost 3 pips away. And usually when coming to Forex, we want to keep our stop loss around about 50 pip, 5 pips to 10 pips max. So keep in mind, if we are looking to enter a buy, right? We are entering a buy. This is going to be the bid price. One thing to keep in, so this is how you identify spread, basically what bid price is and the ask price, and always keep thought. So this is what spread is. As you can see, the bid price and ask price, this is where the broker is going to be entering you. Different brokers have different spreads. Ideally, you want to keep it as small as possible as it helps you as a trader. I mean, if this is smaller, let's say you had 1 pip, the entries doesn't have to move all the way. Price doesn't have to move all the way past your bid price to get in profit. If this is smaller, right at the moment, if price has to move all the way past it in order for you to be profits, yes, it might not seem like a major difference, but if price was here, if the bid price was here, then you would be in profits a lot sooner. So this is how you identify spread. Very important and to keep an eye on when you are trading, that you can identify these areas, to identify what spread is, so that you can calculate it within your stop loss and take profit as well. I'm going to be running over the next episode. We're going to be running over what stop loss, what is take profit, what is market execution, and so much more. See you guys then.